Hello and welcome to Markets Today. I'm Lata Venkatesh, and joining me from the New Delhi News Centre is Surabhi Upadhyay. Well, it was a very deep cut that the market saw today, 2% plus off on the big indices and well over 1.5% on the mid-caps. But the only thing about today's fall is that you couldn't quite call it unexpected or a shock that the market was not prepared for. The global cues anyway gave us the sense early morning that there will be a walkout of equities. But more than that, the domestic cues building over the past week, the 4 days of last week, gave us an indication that the markets were building up for a bit of a fall. For one thing, all the good news is discounted in terms of budget and rate cut, and what is staring at us is probably bad news in the form of fourth quarter earnings. But we'll discuss all that and more in the next half hour. Hi, Surabhi.
Hi, Lata. I really admire the fact how you're trying to find some silver lining to what has been otherwise a very, very gloomy start to the week. We will discuss all that, as Lata said. But first, let's start with the headlines. A manic Monday on Dalal Street. Markets tumbled 2% on weak global cues, with the Nifty collapsing all the way to 8750. The Sensex falls 600 points to end around the 28,850 mark. Bank, infrastructure and power stocks see intense selling pressure.
Midcaps feel the heat, but the pain is a little less than in blue chips. The midcap index ends down 1.4%. Cyclical companies like Adani Power, Hindustan Construction, HCC and Reliance Power lose 5 to 8%. Concord bucks the trend, surging 8% on the FII limit being hiked in this stock. Monet Ispat as well ends higher as CNBC TV 18 reports that the company could sell stakes in its power and sponge iron business.
A weak day for IT shares. TCS ends soft after a slew of downgrades following the management's cautious tone on Q4 performance. Mindtree also knocked down by 4% as the management says dollar revenues could see a small decline in the current quarter.
Well, those were the headlines from the markets, and these are the experts that we have lined up on the show for you. We'll get you an excerpt of a very special conversation between market veteran Ramesh Damani and N. Jayakumar with the big bull of Dalal Street, Rakesh Jhunjhunwala. We'll also speak with other experts, Sandeep Bhatia of Kotak Institutional Equities, who will speak about his outlook for the markets.
Okay, before we get to all of that, let's start with a recap of the day that's been a manic Monday on Dalal Street. Fears of the US Federal Reserve rate hike coming in sooner rather than later sent shockwaves across the world, and India was no exception. Anuj Singhal is now here with the day's trading action. Anuj, global jitters coming in, but are they the only thing to blame for the sharp sell-off today?
Well, the background below me quite clearly signifies what happened today. It looked like that old adage of US sneezing and the rest of the world catching cold. That has been the story of past, but the US markets, keeps reminding you who's the boss. And really, the big rate hike fear from the US is something that impacted sentiment today. You've seen the dollar index go to almost 100, and today the market succumbed to that selling pressure that we had because of those rate hike fears. The Bank Nifty again led the decline in today's trade, and the big pressure point came from the currency as well. Rupee, first thing in the morning, was down 0.5%, and that was telling you that today was going to be a tough day for the markets. Let's talk about some of the stocks then. As I said, right on top would be financials. In terms of contribution to the index, ICICI again dragging the index the most, 25 points in a single day, down 4.5%. Axis was down 4% as well, and Kotak was down about 3.5%. Some other prominent Nifty losers, Larsen & Toubro. Now that's important because it's now fallen about 7% in 3 days after continuously making lifetime highs and taking over leadership. So that's been disappointing for the bulls. HDFC Bank was down 2%. Infosys was down 3%. The decline was secular today. About 7 or 8 index stocks contributed more than 10 points to Nifty's decline. ITC, HDFC, TCS were 3 of those, all down about 2% in today's trade. On the metal side, the high beta, high risk stocks, they were selling off today. So Sesa Sterlite, Hindalco, Tata Steel, they were all lower by about 2 to 5%. There was some gainers as well, though, in today's trade. Hindustan Unilever, really one stock which is a bit of a hiding place now for the bulls, approaching 1,000 rupee mark. That was up 4%. Lupin was up 2%. And Jindal Steel and Power, that was up 5%. But it's a very small weighted stock on the index, so doesn't make too much of a difference. And finally, let's talk about some of the mid-caps. high beta stocks where we saw some selling pressure today. Adani Power down 7.5%, P-Power down 7%, and JP Associates down about 4.5%. So the issue now is that the market has lost leadership from Bank Nifty and may well have made a near-term peak at around that 9,000, 9,100 mark. It will be interesting to see if the Nifty takes support somewhere around the 8750 mark where it currently is, or does it have to go back and test the previous lows like 8500 or so.
Thanks a lot for that comprehensive review, Anuj. Well, just two points to add. There is definitely the global backdrop which makes us vulnerable because we are seeing most of the Asian markets also sell off. But we must remember that if it was only the global backdrop, we are actually in an outperformance scenario. The Indian currency is much less vulnerable than it was a year ago or even 2 years ago compared to any of the fragile five. Both the deficits, the fiscal deficit and the current account deficits are a far cry from how vulnerable they are. Definitely the current account deficit. Therefore, that will not be a problem. Between the currency and the debt markets may be a little bit more of a problem because we did get $26 billion of FII debt money last year. Now, as the Indian interest rates come down and the US rates are feared to go up, the arbitrage limit declines, and therefore the debt flows could get impacted. If there aren't enough FII debt buyers of Indian government securities, then one reason why the bank stocks were rising, that is a rise in bond prices, will not exist, and that explains why the Bank Nifty takes a bigger knock. But the bigger problem is that there is a domestic issue as well in India. All the positive triggers, like I told you before, are behind us. The positive triggers were expectations from the budget and rate cut expectations. Now both of them are behind us, and what's ahead of us is a fourth quarter earnings season where perhaps the sole positive area could have been IT, but even that is kind of letting you down given the guidance from TCS and Mindtree. So the market really doesn't have any sector to cling to, and the biggest sector, Bank Nifty, has really now no positives left, perhaps up until the next credit policy, or maybe 2 or 3 inflation readings. We have one coming on March 12th. Let's see how that works out, if that is a temporary sucker at least, but it's certainly not enough to pull up the market or the Bank Nifty by its bootstraps, at least ahead of an earnings season, which is likely to, if anything, be bad for the Bank Nifty.
All right, and that's a concern that has been highlighted by our market expert today as well. In fact, Sandeep Bhatia, Executive Director and Head of Sales at Kotak Institutional Equities, expects the Nifty to head lower, even lower than 8,500 in March. He also says a slower than expected earnings cycle could exert further downside pressure.
I think consumption demand and investment demand is still broadly weak in this country, and to that extent earnings will be cut for the year ending April 16 to March 16, and therefore to that extent the market should trade down in the near term. I think the market can trade to easily below 8,500. I would be more comfortable stepping in as a longer term investor in the region of 8,300 on the Nifty. Reality is that numbers and earnings season will soon start in April. I don't expect any big good news on that front. Overall, people's earning expectations continue to get moderated even for FY16. We are looking at a 17% earnings growth, but I think eventually we will head down to around 12%. I think despite legislation, I think the market will come under pressure because of earnings. I don't think anyone's stopping capacity expansion because they don't have land in the near term. I think there's enough and more land available. It's a question of demand. I think demand is weak in the economy.
Okay, so those are some of the negative cues that investors are worried about. Now let's shift back to the action of the day, the action from the futures and options space. Nigel D'Souza is waiting by with a wrap.
Well, before we look at the options data, just take a look at the India VIX today. It spiked up a good 10%, goes to show the kind of volatility that was there in today's trade itself. So the 9,000 call as well as the 8,900 call, we saw aggressive writing at both those two strikes, and no one's really talking about those levels at present. So some of those call writers, they're making big money. Like in today's trading session, the 9,000 call saw the premium fall from $100 closer towards 30 rupees, while the 8,900 call as well, the premium fell from $160 to around 60 rupees. Lower level put buying, it was protection buying, but in today's session, it made you big money. So the 8,400 put saw the premium move from around $7 to 23 rupees, while the 8,600 put as well, it went from around 19 rupees to 60 rupees. So big money being made by some of those put buyers. Individual stocks that one focus today. JSPL has been a clear shorting opportunity. In today's trading session, it came in for a bit of a short covering bounce. Hindalco, though, was getting sold into aggressive shorting being seen on that counter. Cesar Sterlite as well was totally out of favor. That stock was getting sold into. SBI from the banking space did see unwinding of long positions, while the big star for the last couple of trading sessions has been Hindustan Unilever. Big buying was seen in that counter, even though the Nifty was falling apart. And from the broader markets, Reliance Power, Reliance Communications, as well as IFCI, all of them were getting sold into.
Nigel, stay on with us. Want to discuss the exclusive of the day with you. CNBC TV 18 has learned that Manic Ispat is gearing up for perhaps its largest ever consolidation. The company could be selling stakes in its power and in the sponge iron business. So, Nigel, let me come to you first and then to Kritika. Nigel, do explain to us the rationale behind this restructuring. Where is the move coming from?
Well, Manic Ispat has a total market capitalization of around 500 crores or less than that, in fact. But as for their last reported numbers, the debt as of March 2014 is around 10,000 crores. So clearly they've been struggling with a big mountain of debt. Now, sources tell us here at CNBC TV 18 that they're looking to cut their stakes in a couple of their investments, namely the 35% stake they have in Orissa Sponge and also the 87.5% stake that they have in Manic Power. Now, post some kind of selling in both these two assets, they'll be looking to bring their debt down by roughly around 15 to around 20%.
Okay, thanks for that, Nigel. Kritika, now you come in on this. One of the largest restructurings at Manic Ispat itself. But I'm not surprised. A lot of people under stress, under debt stress, are doing restructuring, and you know that best. Anyway, what are the valuations and who are the buyers that you have heard of?
You know, Lata, you'll be surprised at the valuation. So let me talk about Manic Power, which is, of course, a larger asset. As Nigel was saying, it's 87.5% that they're looking at selling off. The valuation that analysts have been pegging for this is just about 3,000, 2,500 to 3,000 crore rupees. If you push it, 3,500 crore rupees. But my sources say that GSW Energy is actively looking at this stock. And my sources say that they are open to spending up to 4,000 crore rupees. So they'll actually end up getting a premium. The other player that's looking at Manic Power is Tata Power, but my sources say that the conversation with the Tatas is still at an initial stage. Now, as far as Orissa Sponge is concerned, they're only selling a marginal 34% stake. So any buyer that comes in is asking for a larger stake. They've been talking to multiple players. JSW Steel is the only interested party right now, Lata, but what I do understand is that they are likely to give any buyer the option of hiking that stake from 34% to about 80% at a later date over the next 3 to 5 years. In terms of official comments, we haven't gotten comments from the buyers yet, but Manic Ispat said that they are in initial conversations with multiple players. They could look at strategic tie-ups. However, things are very early as yet.
Okay. All right, Kritika, thanks for that. We'll watch out for the developments as and when they happen. Let's move on then. TCS took a beating in trade today, closing down nearly 2% after the management told analysts that Q4 revenue growth is likely to be in line at best with last year's trend. Now, this saw multiple brokerage downgrades coming in, and the brokerages cut their ratings on the stock. For more, let's go across to Reema Tendulkar. Reema, negative views coming in from brokerages. What's the concern?
Well, they have indicated that revenues in this quarter will be similar to what they saw last year, which is about 1.9% and lower than street expectations. And there will be that impact of cross-currency, which will hurt their top line by about 200 basis points and their EBIT margins by 40 basis points. But analysts are disappointed. They were expecting more from TCS as always. CLSA has cut its FY 16-17 earnings by 4%. They say that the margin pressure on account of Forex will ensure that TCS has its third consecutive poor quarter. They downgrade the stock to an outperform versus an earlier buy rating. Motilal Oswal says that we were earlier expecting a constant currency growth of 2.9% in this quarter. We now expect just about 2.5% post this analyst meet. They also lower their FY 15-17 dollar revenue growth by about 0.3 to 1% on the back of a soft guidance as well as greater than anticipated impact of cross currency. Religare too has downgraded the stock to a hold. They see limited upside. They've kept a target target price of 2,700. Kotak says expect another muted quarter. Dollar revenue growth in the next fiscal year will look weak at 13%, but it's important to focus not on the dollar revenue but on constant currency, which they believe will be reasonable. But the stock performance for now will be a tug of war between fears of near-term growth rates as well as solid long-term growth prospects. So they recommend using the weakness in the stock price to buy. That's the reason why they maintain their ad rating on the stock. Back to you.
Okay, thanks a lot for that, Nima. That explains why one segment of the market, the IT stocks, didn't do too well, notably TCS. Let's take a break on that note, but coming up, Sudarshan Sukhani will join in for a technical chat. We'll also get you trading ideas for tomorrow.